Good afternoon and welcome to Payentry's webinar on how to enter and track ACA in the Payentry system. This webinar will be recorded, and if you could type any questions that you have into the questions box on your screen, and we will ask them either going through the chat or going through this webinar or at the end, depending on the type of question that they are. I also wanted to remind you that if you look in the handouts section, there is a copy of this presentation and also a copy of the webinar that was done recently on how to code in the Payentry system using the ACA codes. So we'll get started today. My name's Kathy Graham, and I'm head of HR services here at Payentry. On the presentation with us today is Brianna Grimes. Brianna is my associate, and she does all the hard work, and I just take credit for it. And I can hear her laughing in the background there. So she is going to be manning the questions booth today. Okay, so what are we going to cover today? First of all, this is all on your dashboard, and we're talking about new.payentry.com with your login. On your dashboard, we're going to learn how to do the company setup for ACA, the employee setup, how to make any changes to an employee's setup, and also reporting, the report that you want to be aware of. Okay, so let's start with the setup. Here's your dashboard, and as you'll see, at the top, there is a tab called Benefits. You're going to navigate to your dashboard, and remember, this is all written down for you, so if you print out a copy of the handout, you'll have something to refer back to. But if you print out a copy of this, you can scribble on it as you go along or later on. When you click on the Benefits tab, you're going to see a drop-down, and the first drop-down is the one that you want, ACA. So click on ACA. Once you do that, if this is blank and you've never set up your ACA status, then you will need to enter information here, and I'm going to show you that. I believe that this is done in implementation, so you should already have this scheduled or set up in your system. But if there wasn't anything there, you would click on Add New ACA Status. You would enter in this screen under Setup, and that's right here. You would enter your start date, which would be 1/1/20, and most people use a never ever after date of 12/31/2100. That's the default. So that means that if you put this in, you don't have to change it every year. If this doesn't change, you will need to put in your contact name and your contact phone number. The red asterisks mean that this information is required. Then you click Save and Close. And then the next line over is certification of eligibility. You're going to check one of these boxes or not. You don't have to check either one of them. But if you offer minimum essential coverage, and that's MEC, that's what that stands for, minimum essential coverage, that represents minimum value, and those are two key words in ACA, and you offer that to the employee, spouse, and dependents. That's one part. And the employee-only premium or deduction for the lowest cost plan that you offer was $101.79 a month or less in 2020, then you can check the qualifying offer method. So this one, and you really don't have to check either one of these if you don't offer one or the other. It's not a requirement. The 98% offer method is if you offer qualifying coverage to 98% of those eligible for coverage in your company. And if you don't check either one of those, you move on to the next screen. DGE and overrides at the top, you will not have to contend with unless you have, if you are a government entity, and if you need to check one of those blocks, you just need to call me. Under view data, this is very important because first of all, you need to make sure that you're looking at year 2020 because you can look back at 2019, 2018 if you filed before, but make sure you're set on 2020. And it allows you to see the current compliance level. You can see that this company is in pretty bad shape. Um, there is no information in here for the most part. And if you look at the bottom where it says view errors, it will give you a summary or it will give you detail. If you click on detail there, you will get individual employee coverage and it will tell you where your errors are and what you need to fix. And for all of you that work through us for your ACA filing, you will be getting an email from uh, myself or Brianna this week to try to get on top of this report and make sure that you don't have one that looks like this, that yours has information populated all the way across and no red marks. So we'll be working with you in the coming 7 to 10 days on making sure that your report's ready to go. Okay, that's enough for the company setup. Let's look at the employee ACA setup. So on your dashboard, you would pull up an employee or however you pull up an employee. So I always go to the dashboard and go to all employees, but pull up an employee and go to their snapshot screen and go to the benefits tab. So go to the screen, go to the benefits tab and hit enter. That's going to give you a drop down of, first of all, ACA status. Everyone in your company has to have a status. Here you see that this person does not have a status. So what you would do is click on Add New Status. For them, you choose a start date, and that could be their hire date, and then you choose an end date. Most of the time we do see that default to 2100 so that you don't have to change the person every year. If they stay full-time, you don't have to change them to full-time every year. So this is just an evergreen date. Then you would choose the ACA status from a drop-down list. And I'm going to show you that drop-down list. Actually, it won't allow me to show you the drop-down, but what I've done is the drop-down offers you these options. It offers you full-time, part-time, unknown, and excluded. Do not use the last two unless you've talked to me first because they normally aren't used except in certain specific instances. And if you have to file with ACA, most of those times it means you don't have to file. So let's focus on full-time and part-time. Okay, once you select that, you go down to this next list. Is this full-time person hired to be variable hour? That means that they don't work a set number of hours. You hire somebody and you're not sure how many hours they're going to work. Then you can hire them as full-time variable hour and do your measurement period to determine whether or not they're actually working the 30 hours a week that's required for full-time determination. If you work people, for example, you're a retailer and you hire people at Christmas, that's a seasonal employer. If you're a ski lodge and you only hire ski instructors when there's snow on the ground, then that would be a seasonal person. Those people are not counted in your FS or are not required to report on, so you would put them in here. It will be a benefit to you not to have to do it, that on reporting on them. The premium credit exempt from the individual mandate are hardly ever used. So if you feel like you need to check one of those, please call me first. The three that you're going to be using are variable hour, seasonal, and limited non-assessment period. If you attended the last session we did on the definitions under ACA, a limited non-assessment period, you'll remember, is your waiting period. So you do have to account for someone who is in, say, their first 60 days and you're not offering them coverage because they are in their limited non-assessment period. If the IRS would just call it what we call it, it would be a lot easier, but you just put the in parentheses after that. That's a waiting period. Once you've completed this screen, you would hit Save and Close. The next drop down under that same Benefits tab is ACA Coverage. This person has coverage in here, but if they didn't, you would click on the Add New Coverage button up here, and then you would click on View and Edit once that comes up. To add new coverage, you would add a start date, or I'm sorry, this is what's going to pop up once you hit that Add New Coverage. There's a start date and an end date. See where we've defaulted it to 2100, so you don't have to change it every year if the person doesn't change what's offered. But this date is what you would change. For example, if this person started on 12/1 of this year and they had a 30-day waiting period, and let's say January 1, they would be eligible for coverage. They're outside their waiting period. This first time around, you would be selecting the codes that would represent them being in their waiting period. And on January or 12/31/2020, you would end this coverage and start the coverage offer. So you would select the coverage of offer from the drop down. I'm going to show you this screen and then I'm going to show you the drop downs because for some reason clipping tool doesn't work on drop downs for some reason. So anyway, you're going to hit enter the offer of coverage here. You're going to enter the employee share, which is the employee premium. And you're going to select the employer relief, which is your safe harbor. If the person does not take your coverage or if you're not offering them coverage, this is where you put the reason. And then enrolled in self-insurance plan. If you are not self-insured, you will always check no. So let's go to the next screen and look at this. Here I'm referencing the handout of the prior webinar so that you can determine the correct codes to use for offer of coverage or employer relief, those two. To change the information here, you're going to hit View or Edit. You can pull it up and it will give you what information, or go back to the screen here that shows you that here you have selected 1E. That's a plan that provides minimum value and minimum coverage. Remember, MEC means minimum essential coverage and minimum value offered to the employee, dependent, and spouse. There are a list of these codes, and they're in that prior handout. You also will need to put the employee's share, which is the employee's deduction on a monthly basis. Not their deduction per payroll, but their deduction on a monthly basis. So you may have to calculate that out. This is used if you use codes 1B, 1C, 1D, or E. If you are if you have a qualifying offer, which is 1A, you do not have to put anything in this block. You can leave it. You have to click on zero. I'm sorry, you have to click on this box where the 177.50 is and just enter 0. On the employer relief, this is for someone who enrolled in coverage offered. There are other codes if the person does not take your coverage, or let's just say they're in their waiting period and you have not offered them coverage yet. So there's a different code on the drop down for each situation. And as I mentioned, unless you have a self-insurance plan, the last one will always be no. And on reporting, from your dashboard, you would go to Reports and over to Company Reports. The third one down is the ACA Data and 1095-C Review. If you want to see who is going to get a 1095-C and who isn't right now, run that report. All you do is click on Run. This report will show employees that will or will not receive a form. It actually shows you a preview of their form and what codes are on their form. And it will show you that they're on here, they will not get the 1095-C, or it will say error if something is wrong. You can also filter the data that you pull using Show Advanced Options on that report because this is what the run looks like. And on Advanced Options, you can actually filter to limit it to those people who are getting a 1095 or are not getting a 1095, or everyone. When you have all, the entire report will pull up for you. Under Filtering, the range allows you to sort for full-time, part-time, and other types of employees. Again, this is what this would look like once you run the report. If there is an error, it will be down here at the bottom underneath the table. One thing I want to point out is that every column on the report has to have something in it. Otherwise, it will be considered an error in the system. If, for example, someone did not work for you until September the 1st of this year, 1H and 2A is the code for somebody doesn't work for me. You didn't make them an offer because they don't work for you. That can, in September, that code could change to 1H and 2D, like it does here, because they were now in their waiting period. That's 1H, 2D means the person's in their waiting period. And then in December, this person was offered coverage. I'm sorry, in November, this person was offered coverage of 1A, and 2C means they elected coverage. So you see how it changes going across, but you can't leave anything blank. Even if they didn't work for you, there has to be information in those columns so that the IRS knows what was occurring during that period of time. Okay, I know this has been a really quick overview. If you have any specific questions right now or later, Brianna, do we have any questions in the questions box?
You just have a couple. So the first
Okay.
question we got was, do we need to set this up if we have less than 50 employees?
You do not. At the first of this, I should have made that clear. If you have fewer than 50 full-time equivalents, and that is determined by setting aside your full-time people, adding up all the hours of your part-time people, dividing that by 100 and it's either 120 or 130 for one or the other. It's 130 divided by 130 will tell you how many full-time equivalents you have. You add that back into your full-time number of employees, and that'll tell you what your full-time equivalents are. If you need help with that, let me know. That if you don't have 50 full-time equivalents, you do not have to file this. And lucky you.
Okay, awesome. Next question, are the developers working on something where the report will show the dependents like the actual form that shows, the actual form that will show?
It is in the third drop down. You can see if you go to the benefits tab for the employee, the third choice, first is ACA status, then ACA coverage, and then ACA dependents. It does show there which dependents are on the person's
Awesome.
plan. Okay.
Perfect. Do the forms get approved in Next Gen like they did in Legacy?
Yes, they do. Well, it's different. No, Brianna and I will be working with each one of you to make sure your report is approved, and you will find out from us if it's ready to go. So once that happens, we'll send you a copy of your report, and it subsequently goes to our tax department. They run the 1095Cs for you, and they will go into your secure view. If you're using secure view, if you're not, then it will work the same way if you have another delivery system. We'll make sure that those the 1095Cs get to you so that you can distribute them. The deadlines right now for us is we need all your help to get your reports correct by the middle of January. The IRS has extended the deadlines. It's normally January the 31st to hand those out. It has been extended to March the 2nd, but we don't want to wait that long. We'd like to get this over with. So if there's any way that you could pay very close attention and get yours done by the middle of January, we will be reaching out to you in the next few days to let you know the status of your account. For those of you who have perfect accounts, we will be giving rewards. Promise me. I'll find some way to give you a reward for that because we need help in getting those corrected before the deadline.
Awesome. A couple more questions. So for employees who are not enrolled in insurance due to the waiting period, the code would then be 1H and not 1E. Is that correct?
It is 1H, not 1E.
Okay. And can you explain the difference between 1A and 1E?
1A is based on the federal poverty level, and it has to do with that premium. If what you charge an employee for the cheapest coverage you have, employee only, if that's more than $101.79, and yes, you do offer minimum essential coverage and minimum value, you still can't use 1A because 1A is tied back to what's affordable at the federal poverty level. A lot of people get that wrong, but it does all of that has to tie back into that premium. So if your coverage for an employee is free, you can use 1A. Or if you charge them less than $101.79 a month, then you can use 1A. Otherwise, you can't. Remember, though, that you still do have to offer minimum essential coverage and minimum value to both the employee, spouse, and dependents in order for that qualifying offer status to be accepted.
Awesome. And then one other clarification question. They ask 1A and 2G is for full-time employees who waive coverage. Is that correct?
That depends. It depends on what your what your safe harbor is. Your affordability safe harbor, there are 3 of them. The first one is the federal poverty level one. If you're going to do that and they refuse cover, I mean, if you have a 1A, you can use 2G. The other 2 safe harbors deal with how you determine your affordability, the affordability of your premium. Remember, your premium can't be more than 9.78% of someone's either W-2 wages or rate of pay. So there are 2 safe harbors. If you look back at the W-2 from the prior year to determine whether your coverage is going to be affordable, then you would use 2F. If you use the rate of pay, you would use 2H. It all
Perfect.
boils down to how you deem affordability of your coverage.
Awesome. Well, thank you, Kathy. That was the last question. So
Great.
you're good.
Okay.
Very,
Well,
very thorough. Thank you.
if anyone has any questions afterwards, please email one of us and we'll be happy to get back to you. Just know that if we do monitor your ACA status and you are entitled or supposed to report, you have more than 50 FTEs, then we will be reaching out to you in the next couple of days to get your reports corrected. But go ahead and pull them up and look at them and see what you can do in the meantime. Call us if you need help. If you already know you need help, go ahead and reach out to me and we'll get the process started. Thank you for your time today and hope you have a happy holidays, Merry Christmas. and we will talk to you soon.